Temasek Holdings is set to make a significant impact in India's economy by investing up to $10 billion, approximately SGD 13.4 billion, over the next 3 years. This massive investment will target key sectors such as financial services and healthcare, highlighting Temasek's strategic pivot from China to India. Reuters reported on July 15, citing an interview with Mohit Bhandari, Temasek's managing director for India. According to Bhandari, Temasek is becoming increasingly cautious about its investments in China due to current economic and geopolitical tensions. This cautious approach has prompted the firm to bolster its investments in India, which currently accounts for 7% of Temasek's global portfolio, a figure they plan to increase significantly. India's economy is currently one of the fastest growing in the world. The country's stock market is near historical highs, driven by a surge in initial public offerings and mergers and acquisitions. These factors make India a prime target for investment. In the last fiscal year, Temasek's investments in India amounted to $3 billion, marking its largest annual investment in the country to date. "We are optimistic about India's long-term prospects," Bhandari said during the interview at Temasek's Mumbai office. He emphasized that the current economic and geopolitical tensions in China necessitate adjustments in Temasek's investment portfolio. Last week, Temasek highlighted that returns from investments in the US and India have helped offset the underperformance of its Chinese investments. Currently, about 22% of Temasek's investments are in the US, while 19% are in China. Notably, for the first time in a decade, Temasek's investments in the Americas have surpassed those in China. As Temasek looks to expand its footprint in India, Bhandari hinted at potential increases in hiring Indian investment professionals. Although he did not provide specific details, he mentioned that Temasek currently employs 20 investment professionals in India. The firm's current investments in India include notable entities such as HDFC Bank, the soon-to-be-listed electric scooter manufacturer Ola Electric, and Manipal Hospitals. In April 2023, Temasek made headlines with a $2 billion investment to increase its stake in Manipal Hospitals from 18% to 59%, marking the largest transaction in India's hospital industry to date. Subsequently, Temasek sold a minority stake in Manipal Hospitals to Novo Holdings, the parent company of Novo Nordisk, and Abu Dhabi's sovereign investor Mubadala. The healthcare sector in India is attracting significant interest from foreign investors. Many companies are expanding into smaller cities, and the increasing burden on public hospitals is driving demand for private healthcare. Temasek is keen to capitalize on this trend, with Bhandari stating that the firm sees tremendous growth potential in India's healthcare industry for decades to come. Temasek's recent financial performance also reflects its strategic investment decisions. The state investor reported a 7 billion Singapore dollars, $5.2 billion increase in its net portfolio in 2023, buoyed by strong investment returns from the US and India. These returns helped to mitigate the underperformance of its Chinese investments. As of March 31, 2024, Temasek's net portfolio was valued at 389 billion Singapore dollars, up from 382 billion Singapore dollars the previous year. Despite posting a positive annual shareholder return of 1.6%, this modest gain follows a dismal negative 5.07% return the previous year, the worst since 2016. This raises questions about the consistency and resilience of Temasek's long-term investment strategy. The 10-year total shareholder return remained steady at 6%, while the 20-year return dipped to 7% from 9%, a decline attributed to the exclusion of the post-SARS recovery year of 2004. Retired banker Chris Kwan commented on Facebook, expressing his views on Temasek's performance. "I try to be even-handed about this. But no matter how you view it, Temasek's performance is between mediocre and ho-hum, the latter meaning nothing to shout about and for quite some time now. Down 5.07% last year, up 1.5% this year. Over 10 years just 6%, over 20 years 7%. Pedestrian for an all-equity portfolio with a very large, in fact majority, unlisted, or private, assets and a sprinkling of high-risk high-return VCs. To be real, if these are the returns generated, so be it. Just don't praise Temasek like some godsend to the world of asset management or praise the key people like they are masters of the universe. In contrast, Norway's sovereign wealth fund, the world's largest, reported a record profit of $213 billion in 2023, driven by strong returns on equity investments, particularly in tech stocks. The fund achieved a 21.3% return on its equity investments, highlighting a stark contrast with Temasek's more modest performance. We would love to hear your thoughts on Temasek's strategic shift and its future prospects in India. Do you think this move will pay off? Leave your comments below and don't forget to like, share, and subscribe to 2230 for more insightful news coverage.